Hi my viewers, I'm Dr. Geoffrey Mbova from accountingnest.com. In our previous lesson, we learned about balance sheet preparation and we use a symbol T format. In this third session, we are going to look at the different types of balance sheet formats. Thank you and welcome. Now we are talking about balance sheet formats in this session 3. This is a setup or arrangement which is used to present the balance sheet information to enable the management and the other stakeholders to interpret and make decisions about the organization. Now in this accounting tutorial, we are going to discuss 3 formats that are commonly used to present balance sheet information. The type of format used is based on the criteria adopted by the organization. As we know that there are several types of organizations in different industries, and each one of them may prefer this kind of a format while others may prefer otherwise. Now, before we move on, I have already shortlisted or listed down those formats, and they are 6 in number, but I've grouped them into number 1, vertical and horizontal balance sheet format, 2, gross and net asset balance sheet format, and 3, we have got comparative and non-comparative balance sheet format. So the next move is to look at each one of them, and I will be giving you the definition and what each format entails, and I will be making a presentation of a balance sheet so that you can see the distinction between one format of a balance sheet as compared to another. So there we go. Vertical versus horizontal balance sheet format. Now generally, this balance sheet setup is based on how the balance sheet items are arranged in the financial statement so as to disclose the information needed by the stakeholder. So under these 2 categories, I'm starting with the vertical balance sheet format, which is also referred to as a T format in accountancy. Now, vertical balance sheet format is a setup or an arrangement whereby the assets are recorded on either the left-hand side of the balance sheet, what we actually call statement of financial position, while capital plus liabilities are recorded on the right-hand side. Now the reverse is still okay as long as the recording is done in a consistent manner. For example, if you record the capital and the liabilities on the right-hand side and assets on the left-hand side, then you can also interchange so long as there's no conflict of interest as far as the balance sheet equation is concerned. Now, this side-by-side recording of the items of balance sheet makes the balance sheet format look like capital letter T design. I want you to note the following, that from financing perspective, this format advocates matching of capital and non-current liabilities against non-current assets, and the current liabilities against current assets. The assumption here is that the non-current assets are actually financed by long-term sources of finance, such as owner's equity, what we are calling capital, and the non-current liabilities, which are all of long-term nature, while we assume that current assets are financed by short-term sources of finances, and that is current liability. So let's look at an illustration using a T format, whereby in our illustration 1, we are considering the JKL Limited balance sheet information, which was provided as at 31st March 2017. Now, in this case, or in this presentation, I'll first start with the right-hand side information, which will be portraying the long-term sources of finance which are assumed to be used to finance the non-current assets. So there we go. We have got capital plus liabilities and an amount column, whereby in our case, we are considering US dollar as far as the figures are concerned. Then again, on the left-hand side, we have what is being financed, and that is non-current assets. So under capital and the liabilities, we have got 5,000 ordinary share capital at $10 per share, translating to 50,000. Then 1,000 preference shares at $20, which translates to 20,000. Then we go to non-current liabilities. There is 5-year bank loan of 5,000, 4% bonds of 10,000, 6% debentures of 4,000, and on the side of non-current assets, those finances on our right-hand side are used to finance machinery, which is 20,000, motor van 10,000, office equipment 5,000, furniture 15,000, and lastly, fixtures and the fittings. Then we go to the next category, that is current liabilities, which is repayable within a shorter period of time, which is either 1 year or less. Now, this source of finance, we have examples like bank overdraft, which is 5,500, trade creditors 7,500, accrued expenses 7,000, and income in advance, which was 6,000. All those liabilities or current liabilities are assumed to be used to finance the current assets, which are cash in hand 10,000, cash at bank 22,000, trade debtors 14,000, prepaid expenses 6,000, and lastly, we have got inventory of 8,000. This translates to a total of 115,000 as far as the assets are concerned. And also, when you combine capital and the liabilities, you also get the same total of 115,000. And this portrays that the balance sheet is equal on both sides, and this complies with the balance sheet equation. So let's go to the next category, which is horizontal balance sheet format. What about this kind of a design? Now, this is a setup or an arrangement whereby the assets are recorded along the grain. In other words, along using the rows of the balance sheet, with either assets being recorded from the top, then followed by capital and the liabilities below them, or we can have a reverse of it. So in this case here, there is no law. One can either start with the assets, then we have got capital and the liabilities below them, or we can start with capital and the liabilities, and then balance sheet follows suit immediately after the first items of balance sheet have been put into consideration. Therefore, we are saying you need to note that there is no law which can guide us on how to do the recording. We can start with the either side of a balance sheet. And number two, you need to note that this balance sheet format advocates matching of non-current assets with capital and non-current liabilities, whereas current assets are also matched with the current liabilities, as it was in the previous case of the vertical balance sheet format. But you need to note that in either ascending or descending order, that should be the arrangement. Now that marks the end of that definition and maybe elaboration of what our horizontal balance sheet formats entails. And now to make some more clarification, we go to illustration 2, and again we are going to use the same JKL Limited information, and this time around let's assume that it was as at 30th June 2021. Now in this case of a horizontal format or design, the arrangement tells it all. It tells it all that this is horizontal because the arrangement is such that we record our items from the left hand side towards the right hand side. Like in our case here, you can see you indicate the non-current asset column there, followed by cost amount, whereby cost amount here refers to the original or the historical cost that was incurred when the asset was being acquired. Then the next column is depreciation, whereby it is the cumulative depreciation so far. Then the last one is what we call the NBV NBV column, whereby NBV stands for net book value. Now, net book value is normally arrived at when we get the difference between the cost value and the cumulative depreciation so far. Then that figure comes to the far end. Sometimes we normally call it the carrying amount, or NBV sometimes also referred to as the written down book value. So there we go. When we record we start machinery, whereby the total amount was 25,000 with the cumulative depreciation of 5,000 and the net book value was 20,000. Again, we do the same to furnitures, which was 22,000 with a depreciation of 2,000 so far, and that nets to 20,000. Then you consider current assets. Under current assets, again you need to list down the current assets items such as cash in hand and the cash at bank, which was 6,000, so it's recorded at the farthest column of our balance sheet. I would like you to see where the difference is between this format and the other one, which is vertical. Then the next item is trade debtors, whereby we have got 25,000, and then we sum up all those items, which is both non-current assets and the current assets in nature. The total translates to 125,000. So as a student or as a user of financial information, you need to ask yourself, how were these assets financed? And there we go. We are going to consider first capital and the liabilities, where under capital, which is we also call it the owner's equity, we have got 5,000 ordinary shares, which we are going at $10 per share, and this translated to 5,000. Then we have got 10-year loan, which was amounted to 45,000, sorry. And then we go to current liabilities, and under current liabilities, again, we have got trade creditors, sorry, which was amounted to 20,000, and the last one was bank overdraft of 10,000. When you sum up all that, you get what we call total capital plus liabilities, and again the figure should be equal to the total assets, that is 125,000. Now, this marks the end of our first category of balance sheet format, and you can see how the arrangement of the assets is done. It is simply a matter of having some on side by side, and that's the case of the vertical, while the case of horizontal, the balance sheet items are arranged on a horizontal manner using the rows of the balance sheet. Assume that the balance sheet has got some rows whereby we record our balance sheet items starting from the left hand side towards the right hand side with the details thereof. So let's go to the next category of balance sheet format, and this is gross and the net asset balance sheet format. What about this? This balance sheet format is based on financing perspective of the business. What do we mean by this? What we are saying here is that the format that are under this approach are set, the balance sheet items are normally arranged in a manner such that it is possible for a reader or the user of accounting information, like the management, potential investors, even the investors themselves, to read and know where this organization generates its sources of finances or how it is financed. So in this case, we are going to look at a case of an aggregate approach, another case whereby we demarcate the sources of finances from internal and external. So there we go. So now, whether we are going to use gross or net asset format, again, I want you to note the following, that the balance sheet that's going to be prepared can still adopt the vertical or the horizontal format. So when we go to the gross balance sheet format, you realize this balance sheet format considers the sum of all sources of financing the business. Hence, it discloses the aggregate sources, whether from internal or external sources. And also it factors in the aspect of whether the source of finance is long-term or it is a short-term. Now, therefore, the balance sheet of this nature will display all the aspects of owner's equity, non-current liabilities, and current liabilities as just one stance. So let's look at an illustration for that matter. That is illustration 3. And again, let's consider the same information that we had gotten from JKL Limited, and that is as at 30th June 2021. So there we go. We have the non-current assets, cost amount, depreciation amount, and net book value amount. I don't need to explain this one. I just explained it a little bit earlier on, and I don't need to repeat that. So let's look at the recording. We have got machinery. The cost value was 25,000 with the cumulative depreciation of 5,000 and a net book value of 20,000. Then we have got furniture, which was 22,000. Then the cumulative depreciation was 2,000 so far, and that again gave us 20,000. Then we go to current assets, whereby we have got cash in hand and a cash at bank, where the amount is not recorded at the farthest column of this balance sheet. We record them just below the depreciation column. Then we have got trade debtors, which were 25,000. Then we add the two. Now we can put that total figure, that aggregate figure, as the name suggests, to the farthest corner of the balance sheet. Then we go with the total assets. When we combine the two, we get 125,000. Then we look at how were these assets financed. In this case, we consider capital and the liabilities. Number one, we have got the capital perspective, where under that we have got the 5,000 ordinary share capital at $10 each, which translated to 5,000. Then we have got non-current liabilities, under which we have got 10-year loan amounting to 45,000. And then we go ahead and look at current liabilities, whereby we had trade creditors amounting to 20,000, and then we have got bank overdraft of 10,000. This gives us a total of that 1,000, and when you add the totals again, you get a total of 125,000, and that figure there represents total capital employed. Now, I want you to note that when we are preparing the gross format, the term total capital employed is what represents the gross perspective. You realize that when you go to the next category or the next type of balance sheet format, that is, you'll see a distinct difference between the two and how even we prepare the format. So let's go to the next category, and that is the net asset balance sheet format. Now, as the name suggests, this balance sheet format portrays the net asset perspective of financing the business. In other words, it focuses in owner's claim aspect, that is the net worth of the business. In this approach, just to substantiate, it actually portrays clearly the internal long-term sources of finance, that is equity, and also the long-term sources of finances, which is from the third parties. So therefore, this balance sheet format normally displays the net asset or stroke the net worth of the business, working capital, owner's capital, non-current liabilities, and so forth and so forth. In illustration 4, we are going to demonstrate how the net asset format is presented. So I'm going to use again the JKL Limited balance sheet information as at 30th June 2021. So the balance sheet again looks like that of gross balance sheet format, only that the arrangement of the work is such that we need to do some netting of values to represent the net asset perspective. So in the recording, we have got, as you follow my cursor, non-current assets column, cost column, depreciation column, and the net book value column. So when we are recording, we start with machinery or the non-current asset items, like machinery in our case here, where we have got 25,000 with the cumulative depreciation of 5,000, which gives us a net of 20,000. Then furnitures amounting to 22,000, then cumulative depreciation of 2,000, which gives us 20,000. So when it comes to current assets, we cannot record them in gross perspective. We need to knock out the total current liabilities as follows. That is, we indicate the cash in hand and cash at bank, 60,000, trade debtors, 25,000, which translates to 85,000. So out of this 85,000, we less current liabilities, which include trade creditors and the bank overdraft, which were represented by 20,000 and 10,000 US dollars respectively. When summed up, we get that 1,000 And now when we get the difference between the 85 and the 30,000 US dollars, the net value of 55,000 will represent the net current asset, which is also referred to as working capital. Now, when we combine the non-current assets plus the net current liability, plus the net current assets, we get total net asset of 95,000. And just like in the case of the gross balance sheet format, in this case here, we need to ask ourselves how these assets were financed. In our case, we have got the capital perspective and the non-current liability perspective. Under capital, which is owner's claim, we have got 5,000 owner's share at 10 US dollar translated to 50,000, then followed by non-current liabilities, where under that we have got 10-year loan of 45,000. This gives us again a total of 95,000, which is equal to the total net assets. Now that 95,000, we normally call it net capital, that is owner's equity plus non-current liability. So you realize that in this case, it is quite different from the case of gross balance sheet format, because in this case we are simply focusing on distinguishing between the long-term sources of finances, whereby one case is internal source, like the case of owner's equity represented by the owner's share capital, and the non-current liabilities where we have got the 10-year loan amount of 45,000. So that is how this net asset balance sheet format is different from that of the gross perspective. Actually, the difference between the two, in one case we don't show the demarcation of the sources of finances which are used to facilitate the assets of the organization, while in the second case of net asset format, we want to show the demarcation or have a cutting line between the internal sources which are of long term and the long-term sources which are of external nature. So when we come to the next classification or format, it is referred to as comparative and non-comparative balance sheet format. Now, this balance sheet format is based on performance comparability perspective for a particular organization. So let's go straight away to the case of non-comparative balance sheet format. Now, this case, as the name suggests, the balance sheet format is a single column setup or arrangement, whereby the balance sheet being prepared represents the financial performance or the financial position at the end of only one financial period. So the element of comparison of performance of two periods or more than two periods in this case is absent or does not exist. Now, this format is common with the small businesses where decision making is not necessarily a priority to the owners or either the management. I want you to note that vertical, horizontal, gross or net asset format can be well fitted or domiciled in the case of non-comparative balance sheet format or plan. So the illustration that we have next, that is illustration 5, again we are using the JKL Limited, but the figures have now changed for the sake of avoiding boredom. we are going to look at the information that was presented on 31st March 2017. So how does this balance sheet format look like? We are using a T format whereby, again, we want to demonstrate that the long-term sources of finances were used to finance the non-current assets, and again, the short-term sources of finances like current liabilities were used to finance the current assets. So here we go. 1,000 ordinary shares at $5 translate to 5,000 plus 200 preference shares at 20 amounting to 4,000. Then non-current liabilities, where we have got 5-year bank loan of 2,000, were used to finance those non-current assets, namely machinery, motor van, office equipment, where their corresponding values were 4,000, 2,000, and 1,000 in that order. Then we go to current liabilities. As I just said earlier, that current liabilities included bank overdraft, which were 2,500, trade creditors amounting to 1,500, which were used to finance the current assets, which were cash in hand 2,000, trade debtors 4,400, inventory 1,600. So you realize that the totals on the side of current capital and the liabilities is 15,000, while the asset side again it was 15,000, meaning that that balance sheet is complying to the balance sheet equation, whereby the two sides must always be equal. Then the next category under that focus is a comparative balance sheet format. This is a balance sheet format or setup whereby balance sheet information for 2 or more financial years is presented or disclosed for comparison purposes. Therefore, this arrangement enables accommodation of the elements of balance sheet for analysis purposes. Hence, it is possible to interpret the monetary changes of assets, capital, and the liability items and make conclusions on financial position of a business within a specific period of time. Now, this format is common with large businesses where decision making is actually a priority to the management or the owners of the business. Now, the next illustration, that is illustration 6, again we are going to use the JKL Limited company to represent that information. This is as at 31st. Sorry, in my case I've not indicated, but let's assume that's 31st December 2021. Now in this case, the recording is still like that of a non-comparative perspective, only that this time around we need to indicate 2 columns or n number of columns to represent the number of years that we are comparing the information thereof. So in our case here, we are considering 2 years. That is 2020, which is assumed to be our base year, and the 2021 to be our year of comparison. So you normally indicate those 2 columns on the left hand side of the balance sheet, and also the same is replicated on the right hand side of the balance sheet. So there we go. The rest of the recording is done normally. For example, you can see that we have got capital plus liability and the amount correspond to the year 2020 and the year 2021. And again, to do the same on the side of the assets, we are going to non-current assets with amount for 2021 and amount for 2022. So in this case, we started recording the items of long-term sources, which are assumed to be financing the non-current assets as follows: 100 ordinary shares of $5 per share, whereby in the year 2020 it was translated to 500, and again for 2021 it was 500. This implies that in this year, in these 2 years, there was no additional capital or ordinary shares that was issued to the public. Also, we have got 200 preference shares of $20 per share, and similarly, the values did not change between 2020 and 2021. That is, 400 was constant for the 2 years. Then when we go to the non-current liabilities, under that, we have got our 5-year bank loan of $200 for the year 2020, which for the year 2021, it shows that it is increased to 500. Now, all those long-term sources of finances were used then to finance machinery, motor van, and the office equipment for the 2 years, as you can see on the screen. Then when we go to current liabilities, under this, we have got bank overdraft, whereby for the year 2020, the value was $250, while the corresponding year 2021, the value was $250 also. Again, it shows that there was no change as far as the bank overdraft was concerned for the 2 years. Now, when it comes to trade creditors, in the year 2020, it was $150, while the year 2021, the figure increased to $340. Now, when you come to the side of current assets, again you realize that the cash in hand was $200 for the year 2020, while the corresponding figure for the year 2021 was $203, an increment of only $3. Then followed by trade debtors of $440, whereby that was for the year 2020, and for the year 2021, the figure was registered at $320, which was actually a decline as far as the trade debtors was concerned. Again, we have got inventory, which in the year 2020 it was $160, with a corresponding figure of $270 for the year 2021. So you realize that there's a matching of the years for the year 2020 and the year 2021, whereby the totals on the year 2020, as far as the capital and the liabilities are concerned, were translating to $1,500. Of course, on the asset side, you consider first the year 2020, because you cannot compare year 2020, and when you come to the side of assets, you pick the year 2021. That will be representing an inconsistency. So on the side of the assets, again, the value totals to $1,500. And similarly, for the year 2021, on the side of capital and the liabilities, you can see it is $1,990, while on the year 2021, on the asset side, the same figure was reflecting. Now, this shows that this balance sheet is a more useful balance sheet format as compared to the rest. Why? Because it is possible to make decisions by doing a comparison of the values of assets for the year 2020 vis-a-vis 2021 and make a decision. Similarly, on the side of capital and the liabilities, it is possible to see the movement of the individual balance sheet items between one year and the other, and make your own interpretation for the sake of operations of this organization. So this marks the end of our session, the third session in this accounting tutorial, and this format seems to be the most important and the most informative format as compared to the rest. So you should take note of this. Although the others are not inferior, for cases of small organizations, then we need to use the rest of the balance sheet formats. Thank you. Thank you for watching this session. Now you have learned about what is a balance sheet, how to prepare a balance sheet, and also the three types of balance sheet format we have just discussed. In our next session, the fourth session in this accounting tutorial, we are going to learn about the ledger accounts. Thank you and welcome. Remember, our materials and notes are available in our website accountingnest.com. Thank you.